What if I told you the next global financial crisis has already begun, and Asia is the first battleground? Sounds dramatic? I wish it were. But what's happening right now isn't just another trade war. It's far more calculated and far more devastating. While the world is busy focusing on tariffs and trade barriers, the real war is being fought behind the scenes. A brutal, high-stakes currency war. And the first shot, fired straight into Asia, Taiwan, has just become the first casualty. The storm has begun. 2025 marks the year America launched its most ruthless financial strategy yet. Tariffs are merely smoke and mirrors, a distraction. The true battlefield lies in the currency exchange arena. And now it's no longer a question of if others will fall, but who's next. You might think I'm exaggerating. Honestly, I hope I'm wrong. I hope this entire scenario is just a paranoid fantasy. I want nothing more than to be proven wrong, embarrassed even. But unfortunately, the data is telling a different story. Taiwan has found itself trapped in an impossible situation with no clear way out. If you run a business, invest, or simply work hard, you feel this too. This isn't just a geopolitical chess game. This is something that affects all of us, business owners, investors, employees. Everyone trying to survive in this fragile economic climate can feel the tension tightening. And by the time we recognize the full impact, it might already be too late. At this point, any potential solution comes down to desperate compromise. The man behind the curtain, so who's pulling the strings behind this currency war? Let me welcome you to another episode of The Art of Financial Warfare. Ever since the U.S. appointed Bestent as Treasury Secretary, I knew this moment would come. I just didn't expect it to come so fast and so aggressively. For those unfamiliar with Bestent's background, let's break it down. He's not just any economist. He's a direct disciple of George Soros, the man who famously broke the Bank of England, manipulated markets, and treated national treasuries like his personal ATM during the 1997 Asian financial crisis. Bestent has studied and mastered those same dark financial arts. Now, imagine this. Out of all the financial minds America could have chosen, they picked someone who specializes in short-selling economies. And they handed him control of U.S. fiscal policy. What does that tell you? The Taiwanese dollar whiplash. If you've been watching the currency market, you've noticed something strange. For years, the new Taiwan dollar, TWD, was quietly weakening against the U.S. dollar. But in just 2 short days, it reversed course and regained all its lost value from the past 3 years, a shocking 10% surge. At first glance, this seems like great news. Suddenly, traveling to the U.S. is cheaper. A steak dinner that used to cost 6,600 new Taiwan dollars? Now it's only 6,000 new Taiwan dollars. Shopping, luxury brands, vacations, they all got a sudden discount. Sounds like a win, right? But here's the trap. I saw people online celebrating this sudden currency strength. But others were more skeptical, some even sarcastic. Yesterday it was Japan. Today it's Taiwan. Let me tell you what that means. Remember the Plaza Accord? In the 1980s, Japan was riding high, exporting goods to the U.S., making massive profits. So the U.S. pressured Japan into a deal, strengthened the yen. Overnight, Japanese goods became expensive. Exports plummeted. Companies went bankrupt. Unemployment surged. And what followed? 30 years of economic stagnation. Japan's assets were sold off for pennies and American capitalists swooped in, buying up everything: real estate, businesses, influence. Sound familiar? Is Taiwan next? Taiwan is a heavily export-driven economy just like Japan was. Over 20% of Taiwan's products go straight to the U.S. market. Now imagine this. If the Taiwan dollar keeps strengthening, Taiwanese goods become more expensive for U.S. buyers. Combine that with U.S. tariffs and suddenly, Taiwan becomes uncompetitive. The result? Business collapses. Investors panic. Workers lose jobs. Some suggest, why not cut interest rates to stimulate the economy? Well, Japan tried that too, even went as far as maintaining negative interest rates for years. Guess what happened? Nothing. Because here's the truth. If no one is buying your product, it doesn't matter how cheap the loans are. The issue isn't just money, it's the lack of customers. The U.S. pivots to China. Again after Japan's fall, the U.S. shifted its sourcing to China. Cheaper, faster, easier. If Taiwan lets the TWD continue rising, it risks becoming the next Japan. So what's the alternative? To devalue the currency, Taiwan would need to flood the market with TWD and buy USD. But doing that causes inflation. More TWD in circulation equals prices go up equals your savings lose value silently. And here's the kicker. Much of the USD Taiwan buys will be used to purchase US government bonds. Why? Because no one else wants them. If you're wondering why, check out last week's episode, we go deep into that. So, in simple terms, Taiwanese citizens' money is being used indirectly to buy US debt. This isn't just about Taiwan today, it's Taiwan. Tomorrow, could be South Korea, Vietnam, Hong Kong. Any nation that tries to hold its currency value will be forced to soak up American debt, just to survive. And in doing so, they prop up an unsustainable financial system while hollowing out their own economy. So let me ask you, backhand index pointing right, will your country be next? Backhand index pointing right, will your savings be quietly drained to buy someone else's problems? Because in this game of financial warfare, the house always wins, unless you know the rules. Final thoughts. So, what now? If you're an investor, a business owner, or simply someone who wants to protect their future, you need to understand the deeper forces at play. This isn't about stock tips or currency exchange tricks. This is about recognizing patterns from the past, seeing how they're being repeated today, and preparing for what comes next. Stay alert. Stay informed. Because the real war isn't being fought with guns or missiles, it's being fought with money. And you are already on the battlefield. Following the currency battle, when choosing becomes a trap, as I mentioned earlier, if the government wants to protect exports, it has to devalue the currency. But ironically, if they try to hold the exchange rate down, it's no different than handing over the people's money to the US government. At this point, some might think, well, this must be the deadlock you were talking about. But no, it's not the real deadlock yet, because at that point you still have the power to choose. You can weigh the cost of each option, and simply go with the one that causes less damage. As long as there's a choice, there's still a way out. True deadlock is when you have no choice left at all. And unfortunately, that moment has already arrived. Heavy heart, but silence is not an option. That's why, as I share this video today, I do so with a heavy heart. I know what I'm about to say may make you feel anxious. But if I stay silent, if I just sit and watch as the people who have supported me for so long walk straight into a financial trap, how could I live with myself? At this point, it's probably too late to talk about prevention. The only way left is we have to save ourselves. If you don't want to become a sacrificial pawn in this collapsing system, if you even dream of breaking free from your current social class, then I invite you to subscribe to my channel. I'll continue sharing important insights to help guide you through this. And if you're afraid you might forget everything after watching, just hit the like button. That way, you can find this video again anytime and act on the information when you're ready. TWD surges, a shocking jump in 2 days. In just 2 days, the new Taiwan dollar, TWD, surged 10%, a rate not seen since 1988. But why? Most people believe the main reason is that Taiwan's life insurance companies dumped US assets and converted them into TWD. Historically, Taiwanese institutions have preferred investing in US dollar-denominated assets totaling around $1.7 trillion USD. Of that, about $1 trillion US comes from the private sector. And within that, $700 billion US is managed by life insurance companies. Meaning, when the Taiwanese public pays their premiums, these insurers take that money and invest it in US assets, such as treasury bonds, US stocks, and corporate bonds. US market plunge. They had no choice but to sell recently. US stocks have plummeted. US bonds haven't done any better, they're still in freefall. These insurance companies have taken massive losses, hitting the stop-loss threshold. They had no choice but to liquidate their US holdings, convert them into cash, and then exchange them for TWD. And when they all started doing this at once, it was as if the entire market started selling USD and buying TWD. So, naturally, the value of the TWD skyrocketed. $8 billion moved a $1.7 trillion market. This is the most widely accepted explanation. But personally, I'm still skeptical. Anyone who knows finance knows this. If a currency fluctuates 2% in a day, it's a big deal. If it fluctuates over 5%, it's considered out of control. In those cases, central banks usually intervene immediately. Yet, here we are, TWD surged 10% in just 2 days. And the total transaction volume behind this movement? Less than $8 billion US. Think about it. Taiwan currently holds $1.7 trillion USD in assets. A 10% surge in TWD instantly caused a loss of $170 billion in asset value. Taiwanese life insurance companies alone still hold over $600 billion in US assets. That means they've already lost $60 to $70 billion USD just from the exchange rate shift. Yet the actual amount they managed to recover from their US investments? Barely over $8 billion US. They lost money to lose more money? In other words, just to recover $8 billion in cash from US stocks and bonds, they willingly took a huge loss. Then the exchange rate jumped, causing them to lose hundreds of billions more. Isn't that like saying, we haven't lost enough yet, so let's create more losses through currency exchange? It's as if the Taiwanese people gave their money to life insurance companies. And those companies brought the money to the US markets only to let it evaporate. To put it bluntly, isn't that like voluntarily donating money from Taiwanese citizens to American capitalists? Even more concerning, the Taiwanese central bank hasn't stepped in at all. It's as if, just as some financial monks predicted, they're silently allowing it to happen. The global currency war has begun. I'm not convinced. I refuse to believe this is just an accident. Because the truth is, not just the TWD, most global currencies are rising against the US dollar right now. The difference is other currencies are rising gradually. But TWD? It's the slowest to start and then it spiked suddenly. Take the Japanese yen, for example. The one we invested in last year? It's already up 15% against the USD. The euro? Up 13% this year. What does that tell us? My friends, the currency war has officially begun. In previous videos, I've mentioned how US capitalists like Warren Buffett, Bill Gates, and Mark Zuckerberg started dumping their stocks last year, pulling in massive amounts of cash. They knew something was coming. And now we're starting to see why. Continuing from before, as global investors rushed to scoop up US stocks, an ironic twist unfolded. Those holding American assets are now the ones suffering the most. Meanwhile, American capitalists, sitting comfortably on piles of cash, watched and waited for the perfect moment to strike. It all started when the US fired the first shot, raising tariffs that sent domestic prices soaring. This inflationary wave triggered a market collapse. As chaos unfolded, Trump's family and inner circle walked away with massive profits, while investors around the world holding US-based assets were left nursing heavy losses. And as those losses became apparent, the natural instinct was to sell off quickly. But here's the catch. When the time came to cash out, investors realized they couldn't. Why? Imagine you're an investor in Taiwan. You've already taken a 40% hit on your US stocks. Now you want to sell and convert your money back to new Taiwan dollars, TWD. But wait, TWD has appreciated 10%. That means when you convert your dollars back, you lose an additional 10%, bringing your total loss to 50%. Brutal, isn't it? Now let's say you're in Japan holding US bonds. You're already down, and if you convert your USD to yen, which has appreciated 15%, you suffer even more. In short, global investors are stuck. Their local currencies are gaining value and their US investments are locked in. The money they put into American assets is now frozen. Impossible to withdraw without absorbing further losses. When people rush to convert their money back into local currency, the value of those local currencies surges, deepening their losses even more. Like I said before, just $8 billion flowing into TWE can push the exchange rate up by 10%. That relatively small amount is enough to trap every Taiwanese dollar invested in US assets. There's no way out, no reversal, no cashing out. Even if you wanted to sell your US stocks, you couldn't. Why? Because converting back into TWD means losing even more. Converting to yen or euros? Same problem. Those currencies have all surged. This is the second shot, the currency war. And the third shot? As I said in a previous video, it's the spark that ignites a global financial crisis. When that crisis hits, the fallout won't be limited to the US, the entire world will feel it. Everyone holding dollar-based assets will bleed. And as more people try to dump those assets and exchange dollars for local currency, currencies like the TWD, yen, and euro will spike even higher. The ones footing the bill for America's debt will be the very currencies trapped in this vicious cycle. And the more those currencies appreciate, the more devastating the losses. At that point, savvy American investors, people like Warren Buffett, will swoop in with their yen or Hong Kong dollars already boosted in value to buy up American assets dirt cheap. Meanwhile, the US dollar weakens, shrinking the mountain of debt America owes to the world. Now don't get me wrong, I'm no prophet. A prophet has a crystal ball and can predict rain tomorrow without explanation using supernatural intuition. I don't have that. What I do have is the ability to look at dark clouds forming and reason that it might rain. All I can do is read the charts, spot the signs left by big capital as they quietly shift direction, and guess what's happening behind the curtain. I'm not ahead of the game, I'm just trying to escape in time. I see capital moving into gold, Bitcoin, Japanese yen, and Hong Kong stocks, so I follow them, hoping to pick up scraps while the big players eat. If you look at this chart, you'll notice something interesting. When US stocks surged in the past, trading volume also spiked. You can measure that against the 50-day moving average line, usually shown in purple. Any time volume exceeds that line, it's considered significant. Now look at the recent rebound. Stock prices rose, yes, but not once did the volume break through the 50-day average. This tells us the recovery wasn't driven by large capital inflows. It was mostly from investors who were stuck and chose not to sell, hoping to avoid steeper losses. Why aren't they selling? Because, as I explained earlier, selling now would only worsen their losses due to currency appreciation. So the selling pressure is low, and the buying interest is weak too. But because buying is slightly stronger than selling, a fragile rally has appeared. Still, it's not backed by the smart money. The big players haven't stepped in to buy the dip. And now, you hear people everywhere saying, US stocks are surging again. But if you listen to them and put your money in, where would you be today? If you're smart, you'll realize that whether the US market goes up or down doesn't matter anymore. What really matters is whether your local currency is rising or falling. Let's say today you take advice from someone hyping the market. You convert 1 million TWD to USD, planning to buy US stocks. But even before you buy anything, TWD appreciates 10%. That means you've already lost 100,000 TWD. Without lifting a finger. This is why I say Taiwan and the rest of the world is now trapped in a financial checkmate. For example, I have a friend who invested in Hong Kong stocks and made a 30% profit. But when he converted his gains back to new Taiwan dollars TWD, his profit shrank by 10%. So what should he do? Honestly, nothing. As long as your investment returns outpace the loss from currency exchange, you're still in the green. As investors, we have to think globally. If you're Japanese but your domestic stock market offers few opportunities, naturally you'll look abroad for better ones. The key is the profits you chase must be worth the currency risk. The return must be natural, in line with market trends, something worth the gamble. Take me for example. I don't have much of a choice, I operate mostly in US dollars. And I know full well that the dollar is set to depreciate. So, instead of stubbornly holding on or blindly buying more US stocks just because the media hypes them up, I pivot. I choose currencies or assets I believe will appreciate over time. Still, sometimes I wonder, am I seeing things wrong? People keep saying US stocks are surging. But what exactly does surging mean? I want all of you to learn to make your own judgment calls. Think back to early last year, why did I invest so heavily in US stocks then? Because back then, we were in a true bull market. You could practically close your eyes and make money. That was a time when US stocks soared with every uptick. A 10% rise was common, while a drop barely reached 2%. That's what I call a strong upward trend, and that's when we made our move. Now, US stocks have fallen sharply from their highs. What we're seeing now is just a rebound, a bounce after a crash. And rebounds are normal after collapses. But let me be clear, I don't see any strong upward trend here. The stocks that dropped, have they really recovered? On paper, maybe. Take a closer look. When prices dropped, they fell 26%. Now they've climbed back 24%. Sounds good, right? But if you check the charts, you'll see that's only half the fall recovered. In other words, if you lost $500,000, you're still down $250,000. So tell me, does that sound like a true recovery? Sure, some people can still make money during rebounds, but these aren't the easiest times to make money. And let's be real, how do you know how long the recovery will last? How far it will go? Or whether a new drop is just around the corner? Most people end up stuck, losing the most when they try to catch the bottom and gamble on a recovery. It's a dangerous game. Our approach is different, we follow the trend. When the market clearly enters a strong bull phase, when money flows easily and opportunities abound, that's when we jump in. We don't chase difficult gains. We aim for ease, clarity, and high probability wins. Let me put it simply. In a true bull market, your odds of making money are around 80%. If you pick the right assets, whether it's gold, Bitcoin, or select foreign stocks, they can even double in value. But if you enter during a fragile recovery, your chances drop to below 50%, and even if you profit, it won't be much. So why choose the harder path when the easier one is just a matter of timing? That's why if you don't want to miss future golden opportunities. If you want to sleep well at night, stay stress-free, and still earn long-term wealth, you need to start preparing now. Learn to speak the same language as me. Align your mindset with mine. Understand the logic and philosophy behind my investment strategy and then apply it to your own life. And if there's anything I said today that you didn't fully grasp, I strongly encourage you to go back and watch 2 or 3 of my recent videos. I keep things concise, but everything I share is interconnected with a clear, logical flow. If you skip those earlier videos, you might think I'm only reacting to events after they happen. But the truth is, many of the things I talk about now I've already warned about before. I just can't keep repeating myself in every video, or they'd be way too long. Lately, things have only gotten more chaotic. But because of time limits, we'll have to stop here. I offer this knowledge freely. How to become wealthy, build a business, invest wisely, and ultimately reach financial freedom. If you don't want to miss out, I recommend subscribing to my channel and turning on notifications. And if you found value in this video, please feel free to share it with others. To those of you who liked this video, I sincerely hope you'll be among the first to achieve financial freedom. And honestly, if just 1 or 2 things I said today helped make your life a little bit better, then I'm already fulfilled.